ladies and gentlemen, brings us to the third session of today's summit. The theme of this session is the growth of Indian-New Zealand connectivity and the challenges and opportunities that presents. Our first speaker for the third session today is Mr. Binit Somaia, Director of Kappa South Asia. Mr. Somaia was a co-founder of the New Delhi office, which was established 15 years ago. Mr. Somaia has been a key member of teams working for airline and airport clients across Asia, Africa, and North America. He's held various senior leadership roles in Air France for the Southwest Pacific region and was the Global Director for Business Development at Optial, a risk management solution provider. Ladies and gentlemen, please join me in welcoming Mr. Somaia.
Thank you, Priyanka, and thank you to the INZBC and the NZTE for all the wonderful arrangements at this event and for the invitation to be here. Distinguished guests, ladies and gentlemen, Kappa is a specialist aviation advisory and research practice. We're headquartered in Sydney, but our largest office is actually in New Delhi. So, I've been asked to give an overview of the Indian aviation sector. I will skip over any aspects that have already been covered. It's quite a big topic, and I'll try and do it as quickly as possible. So as I said, I'll give you a bit of an overview of the industry, where we've come from, where the industry stands today, and what the potential is going forward. But as has already been alluded to this morning, there are some challenges, and those challenges, as has been mentioned, does create some opportunities. So, as mentioned, the first commercial flight in India was quite some time ago, 1932. But, as Kush mentioned, the industry is really only about 15 years old. About 25 years ago in 1993 was when the industry was first deregulated. That's when the monopoly status of the two state-owned carriers came to an end. Private airlines were allowed to come into the marketplace. But the market really only surged from 2003 onwards. That's when we saw the entry of LCCs, we saw some rationalization of the taxation on the industry, increased market access for foreign carriers, and the commencement of the airport modernization program. So it's really only in these last 15 years that the industry as we see it today has come to light. So what's happened in that time? Well, domestic has been the star performer. In 15 years, we've seen the number of passengers increase more than 8 times. International, still very creditable, sustained double-digit growth rates. It's not unusual that international would be a little slower than domestic in a market like India, but to be quite honest, that market growth has been constrained below its true potential because of restrictions on market access for foreign carriers. Total number of passengers obviously grown in line with that. I think it's striking to note that in 2003, only 15 years ago, 43.7 million passengers in total. That means an economy the size of India. At that stage, the population was probably about 1.2 billion. An entire market of that size served by the equivalent of just 2 Auckland airports. Really quite striking. And the structure of that traffic has changed as well. We've seen that the private airport share has gone from 3% to just over 50%. And as you saw in Andrew's presentation this morning, these airport operators, at least the private airport operators, are world-class. I think it's a matter of some pride that we've gone from a situation where in 2003, an Indian government committee declared that Indian airports are for the most part an embarrassment, to a situation where they're now winning awards and are an exporter of airport management services globally. And the LCC industry, in 2003, didn't even exist in India. Today, it accounts for the majority of domestic traffic. And as has been mentioned, in line with this growth, the number of fleet in service, number of aircraft in service, and the number of aircraft on order has grown significantly. So where does that put India today? As mentioned, it has, as of last year, moved into 3rd place, the 3rd largest domestic market in the world, behind the US and China, although quite a fair way behind the US and China at this stage. To put it in some context, it's about 10 times the size of New Zealand's domestic market. And on the international front, India ranks much lower. It's only 18th and about 4.5 times the size of New Zealand. But despite all this growth, do we believe that the market is now approaching saturation? If it's grown 8 times, surely we must be getting there. Not even close. If you look at the 20 largest domestic markets in the world and the 20 largest international markets in the world, on both counts, in terms of the number of seats per capita, India is the lowest, and by quite some margin. It's low even by the standards of other emerging markets. So in the domestic sector, for example, Philippines, China, Mexico, Indonesia, all 5 to 6 times the level that India has today. So I think that suggests that the upside potential is significant, huge opportunities on that front, which is why Kappa believes that on an unconstrained basis, these are our traffic forecasts, on an unconstrained basis, we could see the market, in terms of airport passenger traffic, triple over the next 10 years. That would make it a 1 billion passenger market. And these are growth rates taking place now on a very significant base. So the absolute numbers that have to be handled each year are really quite staggering. These, as I mentioned, are on an unconstrained basis, so that assumes that airport capacity and skills availability will keep pace with the requirements. That's not a given, but that's the basis on which these forecasts have been developed. They can be achieved. Quick overview of what is the structure of the market. On the domestic front, Indigo, an LCC, one of the world's largest LCCs, accounts for about a 40% market share. Its rate of growth is quite incredible. Over the next 6 months, Indigo will take delivery of up to 2 aircraft every single week. That is a huge management challenge. And that will see its market share approach and shortly exceed 50%. So it's increasingly becoming a case of Indigo versus the rest as far as the domestic market is concerned. On the international front, full-service carriers still dominate, but LCCs are growing, which is why we see Jet Airways and Air India remain the 2 largest international carriers, Emirates being the largest foreign carrier. But we will see the LCCs such as Indigo and SpiceJet growing very rapidly. That is going to be their next strategic area of expansion on international routes. Initially, regional international routes using narrow-body aircraft to the Gulf and to Southeast Asia. But the next phase, which we would expect to begin within 18 to 24 months, would be the induction of wide-body aircraft to start genuine long-haul services. And that's potentially where New Zealand may come onto the network map for some of these LCCs as well. On the airport front, there are about 100 airports in India that handle scheduled commercial services, but the traffic is quite concentrated. The top 10 airports account for about 75% of the total traffic. Delhi, the largest, 66 million passengers in the last financial year, 16th largest airport in the world and the fastest growing amongst the world's largest airports. So by the end of next year, with traffic expected to reach 80 million, that would put it on a par with London Heathrow Airport. Mumbai used to be the country's largest airport, but as Kush mentioned, severely capacity constrained because it's a single runway operation, no land available for a second airport, and therefore its growth rate has remained well below the other metro cities. Some of the challenges, some short-term immediate challenges, fuel prices is one, depreciation of the rupee, and overcapacity given the very rapid induction of aircraft. And longer-term challenges, as mentioned, airport capacity will need to keep pace. Availability of skills is becoming a problem. We already see airlines having some aircraft on the ground or underutilized because of a shortage of pilots, particularly captains. That's where the choke point is. India has the highest taxation on fuel on aviation fuel in the world, and institutional weakness at the level of the regulator, at the ministry. And it's not because of a lack of capability. It is simply that they are severely under-resourced to be able to handle the increasing scale and complexity of the industry. Fuel up 60% in terms of Brent crude prices over the last 12 months. Indian rupee depreciated by 10%. And actually, when you combine those two elements, given that fuel is the largest cost input, in this chart, the top line is the price per kiloliter at airports in Delhi. The airlines pay in Delhi in Indian rupees, and the bottom line is the Brent crude price in US dollars. This is on an index basis. We look at it over the last 10 years, and 10 years ago when this chart starts, that's when we saw the fuel price spike at close to 150 US dollars a barrel. Now today, as you can see from the lower line, in US dollars, Brent crude is 40% less than it was in 2008. But as far as Indian carriers are concerned, they're paying the same rate today that they were paying during the worst fuel price spike that they've seen in recent times. So this is a very challenging situation. And with overcapacity, this year alone, India will induct at least 125 new aircraft. That's double what happened last year and triple what happened the year before. It's an unprecedented rate of induction of capacity, and despite the strength of the economy, even if the economy is growing at 8% GDP growth, filling 20 to 25% additional capacity in 1 year is extremely challenging without engaging in some form of discounting, and that's what we're seeing here. This is the Delhi-Mumbai fare search for next week. It's a weekday, so business traffic should be traveling. These are peak hour times, and yet we see full-service carriers and LCCs alike charging less than 50 US dollars. Given the cost environment, that's simply not sustainable. Airports, as mentioned, capacity being consumed far faster than it can be constructed. We estimate that over the next 10 years, pretty much all of the 50 largest airports in India will be saturated, some much sooner than others. Mumbai is pretty much already there, Chennai, Delhi coming up very shortly afterwards. But this is the opportunity. There is a need over the next 10 years to create about 600 million passengers worth of capacity, so about 30 Auckland airports that need to be built, and everything that goes with that in terms of equipment and supplies, capital that is required to build that. So lots to be done. We estimate up to $45 billion of investment required. Staff has been touched upon, but over the next 10 years, the number of pilots will need to be increased by 10,000. That doesn't include retirements and people, as Kush mentioned, leaking out of the system, going to other countries. Cabin crew, 15,000, engineers, 20,000. As has been mentioned before, the numbers are always significant. In terms of airports and airspace, similar, very significant requirements. And so just quickly to conclude, as I believe I am over time now, some opportunities for New Zealand companies. As mentioned, the expansion of the airport sector will drive demand right across the value chain for the airport sector. Education and training is critical. Airspace management, design services, as well as training of controllers is another area. And for airlines, it's been mentioned many times, the potential for non-stop services, but also suppliers to the airline sector, technology companies, anyone that can help drive down costs will be very welcome. And of course, and we'll be talking about this in the afternoon, travel and tourism. This will obviously help Auckland Airport, regardless of whether it's a direct service, even if they come via other points. But the opportunities for New Zealand hotels, attractions, food and beverage, etc., are really quite substantial, and I'll be presenting on that in the afternoon. So thank you everyone for your time, and look forward to the rest of the discussion.